Pre-market futures gap open up on the Nasdaq comp. We can see that Apple again, Google, Priceline. Here's your little sign up. Same culprits. FFIB is in there. Netflix doesn't have much in one today. Let's take a look at the gap open down. Gap open down. There's only ASMI, so people are on hold. Moody's has the potential downgrade on the U.S. debt, so that's holding back the bull gap. However, there is a fairly decent gap in the Nasdaq futures. They're up 13 handles. S&P is at 1370, up 5 handles. J.P. Morgan, Jamie Dimon went ahead and beat by 6 cents a share. Nice thing to do. Dow futures now, they've been kind of up and down and up and down. The good news is that it's day 4 of the monthly options expiration. One thing that we have noticed, as we had said yesterday, is that Bernanke started talking yesterday at 7 o'clock, and he talked about, well, we'll do whatever we have to do from round of stimulus, talk about QE3. That kept the market elevated for about, I would say, 4.5 hours. And in the SMF platform, they stayed elevated, and it wasn't until late in the day, until you got around to 11:30, that an hour and a half before the market is when things started to get a little shaky, meaning that the Dow and the S&P hit their resistance levels, and then things were sold at the top down, and it was a period of time before the weakness got in there. And basically, it was a consolidation range of upper strength of the move that started. Headline events have been driving it. Yum Brands came out with earnings last night. The Moody's downgrade, they're, trying to get these people to make the right decisions. Yes, we did have some S&P contract overnight, which was a high-risk trade. And so there's a little bit of a damper. The trade management will be as follows. Once again, we will not change that top-down short. What we will say is that, once again, the weaknesses take time to build. And once they make their intraday highs, they'll pull back and they'll go back up toward those highs. And if they still elevated and can't break the highs, and they're in a range, but you have a lower highs, meaning that the second tier level at resistance is lower than the first reversal, then there is a timestamp of how weaknesses build up in that price action before they finally come down. So that's going to be the trade management today. It's not a huge gap open. We had some economic data that came out. All eyes are going to be on Google. Google is going to report after the closing bell. So we'll be watching that name intraday. We are long JP Morgan. It's gapping up $1. That will be the trade management. It's not going to change too much, other than once they make their highs, if you have that immediate reversal bar, and the qualifier is at a bottom 2 times greater than the previous bar, whether it's going long with the green bar against the red bar, and or MMTs. The sell bar is 2 times greater than the previous bar, closing below the half bar, and that would serve at resistance on the little volatility up moves within the bid and ask ranges in the equities, and how weaknesses take time to build before they finally start to sell down. So there isn't any major news out here right now that is going to give any great headlines. What JP Morgan, at least they delivered a decent, okay quarter for this kind of environment, and Yum Brands did last night. That's where the discount model came into the Moody's news. Otherwise, that news had the after hours market last night gapping down lower because of it. So we have what we call not a super gap, but in the technology in the Nasdaq 100, that's the biggest gap, and you can see it right here on the gap open up. Signup will gap up again. it will reach its highs. The higher that it goes back up toward the top, the more overbought that they'll be. Remember, overbought, you sell at resistances when they get put in. It's harder to go through resistance levels as you've experienced all this week and last week.